Hello and welcome to Car Dealer Live. I'm James Baggott. I'm the founder of Car Dealer Magazine. Nearly forgot who I was then. And joining me today is Cap HPI's Senior Car Valuations Editor. It's Mark Bulmer. Mark, hello to you. Thanks for giving Darren a month off. How are you?
I'm very well, James. It's good to be with you today.
Well, thank you. Yeah, difficult times at the moment out there, aren't they? It's very tough out there for dealers and the used car market. I mean, let's crack right into this with a headline figure drop for this month, and I'm guessing it's a drop, but maybe you could enlighten us.
Yeah, it's definitely a drop. It's exactly the same as last month. It's down 4.2% at the 3-year 60 point. It's been a very testing month for everybody, I think. I mean, well, a testing couple of months really. No change from what we were seeing 4 or 5 weeks ago. Values are under pressure, and there's plenty of cars in the market, not enough people to buy them. So the balance between supply and demand is definitely in the favor of the buyer. Dealers are not stocking up just at the moment as they would normally do because of the cost of stocking vehicles, and obviously as we get to this stage and values are moving as they are, you're writing the stock back as well as buying it, and there's just people are just stepping away from doing that.
It's quite a considerable drop then, isn't it, over those 2 months? Put them together, it's 8.4% with loss, or £1,625, according to the Cap HPI editorial that you've put out. You made the unusual step of issuing a warning 10 days into November that the market was continuing to drop. Why did you think it was so important to make that notification?
Well, obviously, our customers are out there. They're the people buying vehicles and selling vehicles and working in this industry. And it's important that we inform them what we can see as fairly and as honestly as we can. And it was important for us to go out there and say that, you know, what we're seeing a continuation of what we saw last month.
So why is it that prices are falling? I've seen in the editorial, there's a number of things to blame: high interest rates, the cost of living crisis, but all of these things are not unexpected, are they? We sort of saw these coming for quite some time. Why now? Why have prices dropped so drastically in October and November?
I think it's the culmination of all the things that we talk about, you know, whether it be car insurance prices, whether it be APRs, whether it be whatever it may be. It's a culmination. And then, of course, this market is pivotal on supply and demand. And demand is really good. Supply is really good, and demand is where it would normally be at this time of the year, which is, you know, seasonal, and just companies coming to the end of the year, making sure that they're in control of their stock, they're in control of their costs, and they don't want to give away the hard-earned money that they've earned earlier in the year.
Is this a significant market correction we're seeing now? And do you think it's going to continue?
I think it is a correction. We were obviously at some points in the last couple of years 30% above where we would normally be in a normal world. Well, we certainly haven't had a normal world for the last 3 or 4 years, in not just with COVID, but with other things as well. So it is a market realignment. I don't think it's quite finished yet. I think there is still going to be significant supply into the market. Leasing companies, rental companies, manufacturers, all putting cars into the market right at the end of the year, when perhaps it would have been much nicer to see them at the beginning of a year when the market is usually much more buoyant. So I think it will continue to move back next month, yeah.
And if you were to peg some form of rough figure on it, what would you think is going to be? Obviously, I know you're predicting in advance, and it's a guess at this point.
Yeah, I mean, we never like to put a figure on something like that. I just think there will be pressure there. And to be fair, who really does know, you know? What we do think will happen is, though, that these prices, as they are now, do start to look attractive. And I think that retailers should, although it's not my money and I understand that when they go into a new year, you've got to have the stock around you to be able to sell. And I think if you can stock a few more vehicles because you've allowed your stock to run down a little bit, you know, now would be a sensible time, because in between Christmas and New Year and then into the new year can be quite a good time of year. No reason to suggest that won't happen next year. So I would be suggesting perhaps buying a few cars, but not going absolutely guns blazing and taking on too many. Because I do think there will be a strong retail bounce at the beginning of next year.
So do you think we're at the bottom of this correction? Do you think or do you think there's going to be more to come?
I think there's more cars to come. So I think I mean, everybody thinks the prices go up in January. In effect, they actually don't. They tend to stay pretty much where they are and even move back slightly. Because what tends to happen is that the cars that sell in January tend to be the cars that were left over from the year before. And it takes a while for those vehicles to come through and into the market again. I think there's going to be enough cars in January. We believe that there's going to be enough cars in January, and there could still be some pressure on value.
Sorry to interrupt you there. I was going to say, I note in your editorial this month that you've used the term Christmas has come early, but not in a good way for dealers.
Yeah.
And I take it that, you know, what we're seeing now is that December lull brought forward a little bit. Is that correct? Is it the fact that there aren't the buyers out there buying because of they're saving up for Christmas? Is that what we're seeing?
Well, I think there is retail activity out there, but it is where we would normally see it. Some people are doing pretty well out there. They're moving quite a bit of metal, but they're buying the cars really quickly, preparing them, getting them on the forecourt, and selling them rapidly, and then coming back and buying small amounts again. So nipping into the market, in and out of the market all the time. It's difficult for other dealers because that's not how they operate, particularly if you've got a new car franchise. You know, you've got part exchanges that you know are going to be coming, but they're coming further down the line, and when they do come into stock, you're going to use them first rather than, you know, nip out and buy into the market.
The other point that I note in the editorial was these sort of three general schools of thought when it comes to pricing for dealers. I mean, you say that firstly, there's those that had purchased at the previous higher trade prices some time ago now, and they're holding firm on those advertised prices, expecting things to improve. Then secondly, you've got those that are reducing their prices daily in an attempt to get consumers in. And finally, there are those that bought cheaper cars you've just mentioned in those recent weeks and are retailing them quickly at those cheaper prices. What would you say to those people that are holding on to stock at the moment, hoping for things to improve?
I think you do a little bit of all of it. You know, I think you're in and out of the market, picking off the cars that you want, knowing that you can sell them and maintain a really strong profit margin. The ones that you have in stock, you try and keep them as close to the price point as possible. And if you want to hold on to your stock, as long as you've got the provision there and it's not, you know, you're making sure that you're not going to be taking some severe pain at the end of it, then, you know, January's only around the corner.
And Mark, what's been particularly badly hit at the moment?
I think it's everything, really. I think the only real price point stuff is sort of sub £5,000, which is, you know, the cheap end of the market, which always seems to be really resilient. I think it's down about £85 on the month, which is, you know, normal. I don't think there is a strong one, a really strong part of the market at the moment. But what I would say is that a good car is always a good car. So if you've chosen the right stock wisely, it will sell.
Some experts we're speaking to are saying used car prices will likely bounce next year. Some are saying they're going to hold firm. What are your thoughts on that?
I think there will be some downward pressure early in the year. I think there will be some stabilization middle of the year. And I think towards the back end of the year, I'm not saying rises, but I think it will be quite flat at least, because we've got less cars coming back at 3 years old at the back end of the year.
And finally, Cap, well, I mean, Darren in particular, it came in for a little bit of stick online. I saw from dealers in particular about these drops and the way that Cap has been reporting these. I note that you've addressed this in your editorial, and the fact that you are, importantly, these are facts that you are basing your decisions on, and the movements are based on fact, not opinion. But I just thought it would be a good opportunity to give you the chance to address those concerns that some dealers have had.
Yeah, I mean, nobody wants to be the bearer of bad news, do they? So, you know, somebody has to put a line in the sand and give our customers facts. Everything that we do is measured by information that we gather. The trade values are, you know, we get lots of trade data. We have our own retail database. We apply a margin to the trade data. We do that because the retailers are the professionals. They know what they can get back for a car. We're just suggesting a sensible position. You know, we're not drivers of prices down or anything like that. We have to make sure that we are, you know, an honest opinion of what's going on. We are a guide, we know that, but people do rely on us to be as accurate as we possibly can be. Well, I'm glad I've given you the opportunity to respond to that. We'll certainly be giving our readers all of the details of your latest editorial at cardealermagazine.co.uk. But Mark, thank you very much for giving up your time. I really appreciate it. Thank you, James. Good to see you. That's Mark Bulmer there from Experts Cap HPI. Now, for more videos like this one, you can subscribe to our YouTube channel to be notified when they next come out. And for the very latest on used car prices, visit our website. It's cardealermagazine.co.uk. I look forward to seeing you next time. Thanks for joining me. Goodbye.